Alrighty, and you guys are here, and so I'm going to honor your time, and we are going to get started. You guys both know who I am. I'm Tabitha. I'm the team leader at Excel. Hi, guys. I just loaded a bunch of stuff in the chat in the case that you don't have it. Honestly, I don't know that you need a lot of materials for this session. Most of what we're going to do is just going to be exercises that we have right here in the PowerPoint. One thing that'll be helpful if you don't know it yet is to go ahead and pull your own average commission. So I have an average commission for Columbus Realtors overall, or an average sales price. But if you think that yours might be drastically different, or Mary, I know that you're not in Columbus as much, but more in Chillicothe. So if you know what the average sales price is there, or what the average commission per transaction is, then that'll help us a little bit later when we do some of the calculations. Just so that we're on the same page, is there anything really specific, especially since we're a small group, that you guys want to make sure that you get out of today? And we'll make sure that that's one of the things that we cover.
I mean, nothing for me specifically. I just want to know a little more, you know, the finances thing. I feel like it's the chapter, you know, when reviewing, because Tabitha, you know, I've only been an agent for about 3 or 4 months now. So I'm just kind of getting into the process of showing homes. I've not officially written a contract yet, but I am trying to kind of learn the financial background so that I can educate my clients, but obviously don't want to speak out of turn or give them false information. And I try and refer them, you know, to their lender for lender questions, but I would like to be more knowledgeable.
Okay. So this, and let me come to here. So this class is really going to be around, and I can absolutely talk with you about that. I'm sure we'll have extra time at the end. I can answer those questions about sort of the financing of properties and advising your clients on the numbers associated with them buying or selling a home. This class is sort of structured around the finances of operating a real estate business. So sort of how much to set aside for taxes, how to calculate what your goal should be based on true profit, not straight income, and then going through some exercises to understand cost of sales compared to expenses and how you should set up all of your accounts. Jack, I know you've been through agent financials, market center financials. Is there anything specific that you would like to talk about today? Yeah, sometimes
no,
questions to drink coffee,
no,
so that's okay if you don't have.
Well, no, to be truthful, Tabitha, I'm going to be kind of doing something on a computer and I'm listening to you also.
That's fair.
Okay. I'm going to be truthful with you. So
that's fair.
No, but
no,
it is, this is very important. And I like to do it, all these different things. Just if I can pick up one thing, you know, or with MREA, I know the numbers are changing and, you know, that kind of thing. So I like to listen to this stuff and get your perspective and things too. So it's always good to hear other people's perspective, even if it may be the same basic information, you know?
Mm-hmm. Absolutely. Okay, that sounds good. Happy to share. So if you're participating or if you have been participating in the other sessions of Ignite, then you've seen this slide many times before. So the purpose of Ignite is to help you do all of these things, right? And the part that we're going to get to today and spend the majority of our time on is right down here at the bottom, number 9, managing money. And the reason that we want to do that is because most realtors, when they get started, have never owned their own business. And they're coming out of typically more traditional income producing activities or jobs, right? And in a job, your income is the same as your profit typically because they've already taken care of everything else. They already withhold taxes. They already pay the expenses of the business from the business, and then they pay you what's left. Whereas in real estate, we really want to make sure that when you're setting goals and when you're operating your business, that you're doing so in a way that can help you to be sustainable long-term and that can help you really calculate your goals appropriately, right? So we do want to start with some perspective. This will be the flow of our course today. We will talk a little bit about some of the MREA models, specifically the financial model, or what we call now 30-30-40. We'll talk about the flow of money and how we want to kind of think of it in reverse from a traditional job. Build out your future, including some goals so that you have a very clear understanding of what you need to accomplish in order to earn the profit that you want to earn. And then we'll discuss best practices as well. Hi, Miss Jackie.
Hi.
I saw you pop in. I had to say hello. You are all though black boxes. So if anybody feels like brave and wants to put their face on camera, I'd love to see faces too. I always say you don't have to have makeup on. You don't have to have a fancy background, but I do like teaching to not black boxes. All right. So, you know, Keller Williams is known for models and systems as well as technology. And so naturally, we want to make sure that you're pursuing, in this case, the models and the systems that are going to allow you to earn what you want to earn. As you read through these, and then if you are following along on the participant guide, download, these should be on page 3 or 4. I always feel like when we have slides like this, that they look so, I don't know, basic, obvious, whatever you want to call it. And yet I see agents, whether they're first year or 10th year, I see realtors not following the majority of these things on a very regular basis, right? So a lot of times what we'll see is if we look up at the top, it says set a profit goal. It does not say set a sales goal or set an income goal. It specifically uses the word profit. We want to make sure that we don't confuse straight income with profit, right? A lot of agents don't save money for taxes, and most, I don't want to say most agents, many agents do not pay their taxes on time. A lot of folks are selling in April and May to pay the taxes from last year, right? A lot of people don't understand their financials and they just figure if they're making money, they're good. And most agents do not plan for or pay themselves a salary, and they do not set aside money in a business account for future expenses, right? They're paying, everything is coming out of the next check instead of coming out of current or past commissions, right? So we want to teach you how to do all of these things from the very beginning. Any questions as you look at this slide? I always like this quote, money is good for the good it can do. I think as realtors, especially in the first few years, we have a tendency to set our goals fairly low. And what we find is that the higher the goal set, typically, the higher the activity. Right? Linda McKissick would say, if your goal doesn't scare the you-know-what out of you, then it's not big enough. I think when Jimmy says it, Jimmy McKissick says it, I think he says if it doesn't scare the piss out of you, but I don't say it that way usually. All right. So this example is in the participant guide in the chat, and it has a little bit more explanation than what we see here. But as we go through this and we look, we see sort of what I would say the average realtor, or the realtor not at a Keller Williams office or not educated on finances, would be over here on the left, right? So they sell a home. In this case, it looks like it's about a $300,000 property. Their gross commission income is $9,000. It routes through the market center and then pays them a commission of $5,760, which they put directly into their personal bank account and use for all of their personal expenses. Question, is the $5,670, is that income or is that profit?
It's income.
Absolutely, it's income. Right, thank you. I think that was Jackie.
Yeah.
Correct. And so then what we see on the right-hand side is a sound business practice financially, which shows business expenses accounted for, as well as taxes, and then profit. So in this case, what we see is that the same Jessica Campbell gets that same $5,760. That full commission is first deposited into a business bank account, where out of that $5,760, she is going to retain $1,728 to pay towards expenses, right? The rest is going to go into her personal account, paid as what we would consider to be a salary, right? The remaining amount after withholding her business expense recoupment. Out of her salary, she's going to take 40% of that amount and put it into a separate account for tax savings. And in this case, they're even taking that number and dividing that into different categories for state and federal tax, and then the self-employment or the FICA tax.
Tabitha, I have a question. Do you have percentages for this? I don't have the paper. Is it?
Yes.
Okay.
Yes, we'll go through all of the percentages. And if you'd like to see the percentages here, Jackie, in the chat, if you're on a computer rather than your phone, you can go in the chat and you can download the full participant guide. And then this is on page 4 with the percentages.
Thank you.
You're welcome. We are going to go through some exercises though and do some calculations ourselves as well. This is just an example, right? And so here's what we see then is that rather than the full 5,760 going into her pocket, Jessica now has 2,419 in her pocket, but she's also got a considerable amount set aside for her business expenses and her tax savings that she'll have set aside for the future, right? So as we see this, what do you think about that, or how does that feel? Because that number, that when we go from 9 to then 5,700 to then 2,400, sort of how does that look and feel to you? Because what does the client think that you earn?
Yeah, they probably think we earned that full 5.
Sometimes they think you keep the whole 9, right? They don't know. And this always cracks me up. This is like one of those memes where it says like what my parents think I do, what my friends think I do, what the government thinks I do, and what I actually do, right? This feels like that, right? So what my clients think I earn, right? What my accountant thinks I earn, and what I actually keep and what I actually use as profit. But the reality is that all agents have these expenses and they have the tax liability. They're just not planning ahead for it in their goal set. That's what we want to make sure that you do today. So then if we look specifically at the MREA model, and Jackie, this may be some of what you're looking for, what this class is going to do, and let me see who all we have on here. So, okay, full disclosure, real talk time. MREA stands for Millionaire Real Estate Agent. It does not stand for $50,000 real estate agent or $100,000 real estate agent. And so these percentages are going to be based on operating a pretty large scale business, right? So what this is showing is that in terms of calculations, you're looking at from your income that you would set aside 30% towards your cost of sales. And we'll talk about that in just a minute. 30% toward operating expenses. And then that would leave you 40% for your net income or your profit. Now you'll notice though that these numbers are different and are higher than the ones that we just looked at on the example before, right? And then when I show you a different spreadsheet I've got later, that might help you a little bit too. So let's talk about the flow of money. And I referred to this a little bit earlier when I was talking about the difference between operating your own business that happens to be in the industry of real estate versus working in a job for another company, right? So typically what we think of is we think of the flow of money as income goes in, right? That's the plus at the top. We subtract the expenses, and then what's left is profit, right? That's very typical. What we would ask that you do is then consider reversing that so that you know what profit will be remaining at the end. So if we start up here at the top, then the question we would ask ourselves is, how much money do I want in my bank account at the end of the year, right? What do I want as my true profit? How many homes do I need to sell to achieve my profit goal? And then how can I minimize my expenses in order to maximize my net income? Any questions regarding this?
No, I like the words better than the numbers.
Right? It makes more sense this way. So that's what we want to do is we're going to work backwards, and we'll do an exercise once we kind of understand what all is going to go in each category. Then there's an exercise here in the spreadsheet. I also, though, have shared another version of that because I just think it's good to work with the end in mind as a big business, and then kind of considering a little bit smaller business at the same time. I feel like I'm flying through this, but it's relatively quick and easy, and you've only got a couple folks, so stop me if you want it to look at anything longer. Right. So in terms of what actually goes in this income category, I feel like this is pretty straightforward, but there's some that we don't think about very often that I think create a good amount of opportunity. Listing income and sales income, right? Buyers and sellers, that's pretty straightforward. That's where we really think we need to focus in terms of creating income from real estate. However, there are two other categories that can create significant opportunity. Number 3 is referral income. So I was just having a conversation with one of our top agents the other day. Her name is Alicia Godfrey, and she has a requirement for anyone who joins her team that they bring a minimum of 100 contacts into their CRM within the first 30 days. And her new team member was discussing with her the fact that, gosh, you know what? A lot of my contacts still live out of state. In fact, a lot of them are from where I used to live in Florida and California. And I don't really know how that is going to help me sell homes here in Columbus, Ohio. So what they decided to do was to create a referral income goal that will roll up into her total income, where then she would actually build relationships with agents in the areas where her database and the people that know her, like her, and trust her live, so that she can create a referral business. I just had a call yesterday morning from an agent who said, you know, who do you know in Cincinnati? I have a family member that needs to buy and sell. We have incoming and outgoing referrals all the time, and there are agents who have entire businesses built around servicing people in areas that they don't even have a license, but that they generate significant referrals. And the 4th is leasing income, right? We don't have as much opportunity for residential leasing income in our market as they maybe do in some other areas where it's more typical to pay a commission for that. However, especially if you would consider or have the knowledge and ability to do commercial leasing or tenant rep or landlord rep. So we don't do property management per se, but you can place a tenant or you can find a tenant. Then those can create additional income opportunities for you. Then the last one is that there are sort of flat fee opportunities that you can create. So I know of a couple people that are certified tourist, I think it's tourism advisor. I'm probably messing that up, Jackie, you might know better than me. The people who essentially tour around potential new residents for the local hospitals, and they are paid a flat fee by the hospital to do that. They also build relationships, and if that person ends up buying a home, they represent them to buy the home, and then when they eventually, after their residency is over, sell the home, then they sell the home as well. Right? Lots of opportunities for income in real estate. All right, expenses. So certainly in your first few years of real estate, before you have any employees, the majority of your expenses are going to come in terms of cost of sales, right? So as we look at our expense categories, this is going to be the one that we focus on the most today. And this is really only one category of expenses, but cost of sale is anything related to a transaction. So therefore, if a transaction doesn't happen, there is no cost of sales, right? So the examples of cost of sales would be commissions that you pay to your office, or in this case, company dollar, any royalty fees that are paid to KW. If you were to be in a scenario where your team or your group charges a transaction fee or additional commission, if the client doesn't pay it, only then does it become a cost of sales. If the client is paying it, you do not consider it in cost of sales. This is also where if you had to pay referral fees because you were receiving referrals, or if you were in some type of a lead source that paid per transaction, then you would include that percentage in this cost of sales. If you're on a team, your team split percentage is part of your personal cost of sales, Mary.
Thank you for clarifying that.
Yes. So the thing is about being on a team is you can calculate this a couple different ways. And when we get to our individual calculator, I can show you what that looks like. But you can either just, when you go to calculate cost of sales, you just take it out of the top, like you just take it off the very beginning and you put in, after your team split, you put that in as GCI. Or you can adjust your percentage depending on what your team agreement looks like. Sometimes when we do this class, when I have people who are on teams, then I walk through the individual agent example and then I have you stay on, and then we can calculate yours based on your exact team agreements. Typically what we see is that your fixed costs are much, much lower and your cost of sales is much, much higher. And so it typically would offset. Any questions here? Okay, so if we dig into cost of sales, this is where we're going to use some numbers. So here is the formula, and if you have had a closing at KW, this makes a ton of sense. If you haven't, then it doesn't. Right? The way that we calculate cost of sales for you is pretty straightforward. It's GCI, which stands for gross commission income, minus your company dollar, which would be your split, which is the 30% portion, or whatever your agreed upon split is. The royalty, which is always 6%, and then your net commission obviously is left at the end. So I wrote an example down on mine. Don't have a way to type in here, but if I did, here's what I would put. Average sales price in Columbus is $285,000. So then in this box, I put $8,550 is the gross commission income. The split on that.
Can you repeat that number again, Tabitha?
Oh, sure. If the price of the home is $285,000, then the gross commission income should be 3%, which is $8,550. Then the company dollar is 30% of that. So that would be $2,565, 2,565. Then this box would be for royalty. Royalty is 6% of the gross. So in this case, the royalty is 513,513, which leaves a net commission of 5,472, 5,472. So in this scenario, with that average sales price and with the average commission, you would only be paying royalty for about 6 closings, right? So then the system says, okay, let's say you've already capped on royalty, but you've not yet capped on company dollar. What's the net commission now? So this is where it gets a little confusing because they put the wrong thing here. If you've capped on royalty, you don't pay the 6. but you're not capped on company dollar, you do pay the 30. So 8,550 minus 2,565 equals 5,985. You would be in this category at the top for 6 closings. Then you would be in this category for 7, 8, 9. And then on anything more than 9 closings in a year, you would only have one box, 8,550, and you keep the full amount.
This is if you do 285 each closing?
Yes.
Okay.
And you said that final third formula, obviously receiving full gross commission, was after the 9th sale?
Correct. Now, I did the calculations based on, again, based on the 285,000 and 3%, right? So obviously, if your average sales price is lower than that, then it takes more transactions. If it's higher than that, it takes fewer transactions. I'll tell you at 200,000, you cap on both at about 12. Any questions?
200,000, 12, you think closings is more closer to that amount?
Yes, so I've run that number before. I didn't run it in this scenario, but what I can tell you is if your average sales price is 200,000, then the royalty takes between 9 and 10, and the cap takes a 12 to 12 and a half. So I think 12.5 something. And so anything more than 12, you keep 100%. This is the part that gets a little funky, and I apologize that the PowerPoint doesn't let me use numbers. But this is really difficult either if you're coming out of a straight commission category, like straight commission company, then this gets really confusing because of these two numbers and they go away at different times. That's why I like to say, hey, you're in this one for 1 through 6, you're in this one for 7, 8, 9, and you're in this one at 10 plus, for example. Any questions here? Okay. So what we want to do is then use those calculations and use those to actually do your own goals, right? So we're going to do a little bit of an activity, and I don't know that we'll need 10 minutes, but we can take a few minutes certainly. And we want to do these calculations. This is also in the participant guide on page 10. So if you haven't downloaded it, now might be a good time so that you can have these calculations in front of you as you are doing this. And we're going to look at some numbers. So I'll tell you right now, if you start out up at the top at anything other than anything smaller than 100,000, these numbers get a little funny because they're meant to be for a really big business, just to let you know. So what this is showing us is, for example, let's say the net profit goal based on, again, the MREA models, the net profit goal was $100,000 for this business. Okay. Then the gross profit goal, the way that we would get that is to divide by 0.6. So if we divide 100,000 by 0.6, we get $166,666. Then what we know is that to get our gross commission income, because we're working backwards, we're going to divide that number by 0.4. Right? Because we know that we're only going to profit 40% of our gross income, because the other 2/30s go to cost of sales and expenses. In this case, they're using an average commission of $7,500, which would give us 56 closings that would be required. The cost of sales is $23,000. This is using the example of a $20,000 cap, so it's very close to ours. And an expense operating budget of $125,000. What do you think when you look at these numbers? There's no wrong answer.
Sorry, I'm still trying to record all the numbers and go through the calculations.
Oh, I understand. I understand. How many of you have an operating expense budget of $125,000 that you expect to spend operating your real estate business this year?
That was overwhelming. That the budget, the expense budget was kind of overwhelming because I don't have that type of budget at this point.
So, and so that is a huge consideration in this case that you need to look at. The other part that you need to consider is that in this example, you're actually paying tax on $400,000 worth of gross commission income. Does that make sense? So these, Siri doesn't understand. I said something that triggered my.
I want Siri.
Yeah, right. Okay, so when you look at this, it does look and feel extremely overwhelming, and I'll explain kind of why and what this is meant to look like. So this would be an example of a team, probably, that has some salaried folks on it. And so what this would be doing is saying, okay, the biggest part of our operating expense budget, let's say of this $125,000, for example, they are paying a listing specialist $50,000, an admin $50,000, and a transaction coordinator $25,000. And then the rainmaker is keeping the net profit. Does that make sense? Why that number is so big? And so because oftentimes when I teach Ignite, I find that those numbers are a little bit overwhelming. I actually created something different that I think is more helpful. And I called it a first year calculator, but essentially this is more of a individual agent calculator. So in this case, if I put in, whoops, I'm only going to change, well, see, I go messing stuff up there. I'm only going to change the numbers in yellow, right? So I just built this out and I'll explain kind of what that looks like. So if let's say our net profit goal, in this case, is again $100,000. This is going to use a little bit different calculation. What this is going to show is that if we want to net $100,000, then what we need to do is we need to cover all of these expenses, right? But I've used more of a standard single agent expense category than a team lead or a rainmaker expense percent category. You want to cover your cap. Obviously, you can't control that. And that goes in the cost of sales category. Your cap is $21,000. You need to cover your royalty. That's $3,000. In this case, I'm using an expense budget of $20,000 for the year. So in your expense budget, that would include signs, lock boxes, photography, any licensure, you could also be including your monthly office dues, your realtor dues, all of those things. So 20 still might feel a little high to you, yet I would say that you want to really consider all of the true expenses that you have for operating a real estate business. That even includes like gas and wear and tear and mileage on your vehicle. In this case, we're also setting aside $40,000 for taxes. what that means then, and the reason it's $40,000 versus the number on the previous screen is because we are only going to owe up to 40% on the net profit after expenses. And we're going to keep track of all of these things here to make sure that we have those as true business expense. So in this case, for our net profit goal, our gross profit goal is not 400,000, it's 184,000, right? Our gross income goal. So on an average commission of 85.50, that would be 22 transactions instead of 56. Does this make more sense?
Yeah, that helps break down, I guess, like you said, with the whole team aspect. I don't have some of those business expenses.
Right.
This looks more feasible.
This looks more attainable for a single agent growing business, right? Absolutely.
Right.
And I think if the next time that you have time, or if we have time, I'll pull it up today to look at the MREA chart of accounts. In the MREA chart of accounts, you do not have the same level of business expense at a net profit of 100,000 as you do on a net profit goal of $1 million, because you don't have the salaries, right? That's why they say a single agent business, or specifically a single agent business with an unlicensed admin, is the most profitable type of real estate business from a percentages standpoint. It is not the most profitable in terms of total profit, right? But it does typically have the highest percentage of profit. So we could mess around with these numbers quite a bit. So let's say if your goal was 75,000, right? And your average commission was 5,000, then we can see that we would need 30 closings. And at 30 transactions with an average gross commission, or a GCI of 5,000, we would net 75,000, and we would have $30,000 in our tax savings account. I did not, though, change the business expenses, because I think you're still going to have considerable business expenses by doing 30 transactions. So I didn't take that number down, even though this number went down. This really quick and dirty Excel spreadsheet is available in the chat. It's called Financial Basics First Year Calculator. This is what I used to use when I taught first year agents when I was doing productivity coaching. Is I used this category, this calculator, instead of the MREA chart of accounts. Anybody have questions or have numbers you'd like me to put in here to get your transaction goal?
Do you know what the average property would be for this one? Average property?
It is actually, the average sales price in March for Columbus Realtors was $285,000.
Isn't that crazy?
Yes.
Yeah,
The day it pops up over 3, I'll be like, ah. And I talk to people, friends that sell in outlying areas, and they're like, oh my gosh, you guys have awesome sales price. They said, but also you guys really kind of have to work really, really hard for those. Like, yes, we do.
You have to buy, actually, I mean, depending on who you are, seems like that you have to do 2 to that to get the 285 or something.
Oh, sure. Absolutely. Yeah. Well, and that's where, again, there's no wrong answer in any of these categories. You know, so that's why I said, listen, you can earn 75 with 5,000. You could earn 150 with 5,000. It's just going to adjust this number down here.
Yeah, because I feel like with Chillicothe's average home price sale, I'm going to be paying royalties and caps for a long time.
Well, so keep in mind, Mary, as a member of a team, your business expense number is going to go down to not quite 0, but pretty close. You're really just going to have probably gas and your own licensing fees.
Yeah.
And then your cap is not 21,000, it's 5,250.
Mhm.
I'm just joking. Maybe I should jump on a team real quick.
I don't know, Jen. Yeah, I'm looking at numbers and I'm like, oh, individual sounds good. And then I'm looking at that business expenses going, yeah, that
Right.
number, I like that being 0.
Right. So here's kind of what that looks like. So let's say we took all of this, and I'm going to start messing with this. So when I close it, I just won't save it. So let's say you're a member of a team and your stuff looks a little more like that. Honestly, it's probably more like that. So you've got probably in this business expense category, you've probably got, instead of $20,000 worth of expense, you've probably only got 5,000. And in that, I'm including if you pay your own monthly fee, if you pay your own license renewal and all your board memberships. After that, it's pretty much just kind of gas and vehicle.
Honestly, my rainmaker is amazing. Meredith, she took care of all that for me.
Okay, so there we go. We'll take that down. Then what we look at now is that in order, even if your average commission, let's say is, because we want to do this after a rainmaker split. So then we can actually look at that and go, okay, if we do 3,500, I'm assuming that the average sales price and average commission is actually much higher than this, but this number, Mary, would be after, this is like what you keep after splitting with the team, for example.
Okay, thank you for doing that, like kind of tailored to me. That kind of helps me visualize, because I think I've been having trouble visualizing what it would take for me to make a profit, like you said, and separate the taxes and everything for that. So that really kind of helps me visualize what I need to do. Because I mean, I'm not gonna lie, I've been so focused on like how to do the job more than I have how to run a business. So Ignite's kind of helped me to hopefully come up with a plan so that I don't run into trouble, you know, halfway through the year going, oh, great, I'm making so much money. But like you said, I'm not setting aside money for taxes. And so it's kind of helped me realize that this is a business. It's not just a job.
Absolutely. So the other thing that you would want to consider in being on a team, so 2 things. Number 1, obviously we changed these categories. We changed your business expense category and we changed your cap category, right? Though we also did change, of course, your commission category, right? Because your rainmaker takes a split. The other thing you need to consider is the work that you put in order to facilitate 33 closings. And so as a member of a team, you should have other support folks in your team that are doing certain things that you don't have to do. So maybe we even take this down to 3,000 and we go, oh my gosh, 38 houses, oh my gosh. However, you are not creating all of the marketing for any of the listings. You are not running all the CMAs. You're not doing the transaction coordination. You're not doing even some of the lead generation, right? So you have the facility and the time to do 38, right? Versus a single agent for that 75. Miss Jackie, we're going to take these back up, but we're also going to take this one up. Right? And so Jackie, you are going to have more work to do the 25, but you only have to do 25. You should have $20,000 to pay your business expenses, $30,000 set aside for taxes, and a net profit of 75.
I know this class doesn't go over that, but how much do you think of that business expenses would go forward if I added a non-licensed admin to help?
Sure. Yeah, that's not this class, but I'm happy to answer it. It really, really depends on exactly what you need. My recommendation is always to get started is that you try to work on a per project or a per transaction basis, depending on what type of admin you're hiring.
Okay.
We're going to hire a front end admin that you need to, for example, you would say, I think it's worth maybe $300 a month for you to post X number of items to my social media and send X number of emails to my database. Or does that make sense?
Yes.
Project basis rather than an hourly and then trying to fill someone's time. The other, and then if you need more transaction support, so you have the sales, but you just need the transaction coordination, then you would pay like per closing based on completing a very specific transaction coordinator checklist.
Okay.
Mm-hmm.
All right.
Hey,
Thank you.
Tabitha,
Really,
just an
depending on the
FYI.
checklist and how much they do, that would be between $350 and $500 per transaction.
Okay. Thank you.
You're welcome.
Because I think I'm going to have to get someone for me to build my business. I'm going to need help.
Okay.
Yeah.
Okay.
Thanks.
Well, we need to get you back on the coaching schedule too. We said we were going to do that and we had one and we didn't schedule the next one. So we'll
You're absolutely correct. You're
send
right.
Send me some options and we'll get you on the schedule.
Okay. Thanks.
Okay, you're welcome. Any other questions on this? Anybody want me to punch any numbers in for them? Jack, I don't know if you can hear me or if you're multitasking, but if you want me to set something up like this that shows like a true business expense category and cap and royalty and things for team members, I know just like Mary had said, like I was so focused on learning to be on the team, and a lot of times new team members especially don't fully understand all of this. This can really give them some good clarity on their sales relative to their true income.
I'll get with you, Tab.
Okay.
Nice.
And that's something I'm sure we could use for all of our teams, because Mary, when you were first getting started with this, have been helpful in your conversations with Meredith?
Yeah, because I think Meredith sometimes gets a little confused since she's so new to being a team leader as well as to, you know, when I first did my initial KW paperwork, just looking at just the paper that talked about royalties and everything, I was like, whoa, what is this? Or, like you said, that traditional kind of 9 to 5. So talking about commission splits and royalties and caps to me is foreign language. So yeah, I think this would have definitely helped having this in front of Meredith and I. So it set realistic expectations for me when we do monthly goals. So it's kind of nice to now put realistic goals in place for myself.
Absolutely. And in Meredith's defense, it's not just her, and it's not just that she's newer to KW. There are rainmakers at all levels of the business that go, you know, I would like every buyer's agent to sell 3 homes a month because that's what meets our goals for the team. And you go around the room and buyer's agent 1 goes, I'll sell 4. I want to do 3. I want to do 3. And then they get to the next person, they go 3, but they don't fully understand what that really means for their own income.
Right. I did get the opportunity to have a coaching call with her coach, Jen, last week, which is kind of funny because we were just throwing out numbers, and actually the goal was to do 2 or 3 homes a month. So even without looking at this chart, she was already spot on based on our average.
Oh yeah, and those MAPS coaches, they know what they're doing. So
yeah, Jen, I think last name is Metters. Am I saying it right? Jen Metters? Yeah, she's great.
Metters, yep. Awesome. All right. Any questions? Any other questions on this, or does anybody want me to put anything in the calculator? Okay. I messed with this. I'm going to close it without saving it because I don't know what I broke. Okay. So let's come back here and do this. And then do you see the PowerPoint again, guys?
Yep, it's back on.
Okay. So this is, I think, one of the most important pages. And so I would recommend either downloading the participant guide and using this as a very real checklist, or screenshotting this, or whatever works for you, right? But this is my favorite slide in the whole class for Ignite today.
I actually tried to download from our chat, like you had recommended a few slides ago, and it took me to a Google Doc where it said I needed to request permission from you first.
Oh, okay. If you want to hit request permission, and then also I'll show you when we get done here, I'll go into KW Connect and show you where you guys can go to get all of the Ignite resources that don't require Google Drive. So like if you're on a Mac and you just want to get them straight, I can show you where to get everything straight to.
Perfect.
So this slide honestly should be something that I think they give you at real estate school, but certainly all of the real estate schools are very, very focused on the exam content, as they should be, right? And this is not something, and correct me if I'm wrong, Jackie, you guys might have a chapter on this at Columbus State, but I know for a fact Hondros doesn't, on what you need to do to get set up in your business when you first get started. So
We absolutely do not do this.
no,
I have a sales class though that's beyond the 4 classes. We do go over some of these, but not all of them either. So thank you for letting me have this. I'll work it where it's not looks like it's from Keller Williams.
Well, that's the nice. This slide is not braided, so you're welcome to use it, right?
Okay.
Sure. Hey, look, this is important stuff. I wouldn't mind if this was used for other people that aren't outside of KW. The first thing, gain clarity on your big life and hopes and dreams. And that sounds kind of fluffy. I'm not like super fluffy with that kind of stuff, like hopes and dreams. But I do absolutely think there's value in gaining clarity around your business and your income and where that money needs to go. And again, going back to the very first slide, not mistaking income for profit, right? And I think by having these extra bank accounts that we're going to talk about in a second, that helps immensely for you to not mistake income for profit, right? Set up your personal and your business budgets. And this is an interesting aha that people have sometimes. And Jackie, I think you had that aha a little bit, which is agents who operate big businesses have considerable expenses associated with that. The fact that as a real estate agent, we have an opportunity to earn or even exceed a 40% profit margin, because a 40% profit margin doesn't happen in other industries. My dad, when I was growing up, owned his own business, and he had a retail furniture store, and they operated between a 10 and 15% profit margin, and that was a really good profit margin, right? Stores like Walmart and big box stores like that operate on at max 10%, usually closer to 5%, sometimes as low as 1 or 2% profit margin. So real estate is absolutely a great opportunity. Set up your budget so that you can spend money appropriately and that you have money out of each commission set aside to cover those expenses. Create a business entity. This is the part where everyone asks me usually if they should have an LLC. And the answer is, I don't know. I have no idea what your financial situation is. What I can tell you is that I have understood that for most realtors, it's not absolutely necessary in the first year. And my recommendation is to have an LLC or some other type of business entity beginning in your first full year. So in that period where you're setting everything up, doing your business planning and creating all of your entities when it's quote slower in November and December, that's a great time that if you don't have an LLC or a business entity, that you go ahead and do that so you can start the next full year with fresh accounts and fresh recording. Open and operate separate bank accounts for taxes, expenses, and any other savings so that you can get and keep tabs on where your money is and what it's actually set aside for. And then you pay yourself into your personal account only with profit, or if you have an opportunity with a salary percentage. Download and use the MREA chart of accounts. I'll show you where to find that when we get finished here. Purchase or download tax accounting software. This could be something as simple as a QuickBooks that you can connect to your bank account to calculate expenses. and having a separate account for real estate expenses helps with that immensely. Hire an accountant, a CPA, and or an attorney. You may not need them all at once. However, I really do think I did my own accounting, even for my real estate business, up until 3 years ago. And what I found is that when I did finally hire an accountant, I was only paying him maybe $200 more than what I paid for the software to do it all myself. And I guarantee you he's saving more than $200 in taxes. Pay the fee, hire the accountant. Once you start operating in that 100,000 profit or more, you may even choose to have someone that oversees your books quarterly. I know some of our top agents do that. My husband asked me yesterday if allergies were getting me. I said, no, I'm good. I'm like, oh, now it's coming back to get me. All right. Set dates to calculate and pay your estimated taxes. Depending on how much you earned in 1099 income last year, you may not have a requirement to pay estimated quarterly income tax. However, I guarantee if you are as successful as you want to be and you earn the income that you want to from real estate, that day will come. And that is where having that separate bank account for taxes and making sure that you're setting everything aside is going to be extremely helpful. And don't forget that if you're having a great month or a great quarter, don't reduce your percent that you're setting aside for taxes because you see that money accumulating and it's not being paid out and estimated. I had an agent this past year when it was tax time, and there's somebody every year, and I always tease them. They go, oh, like what? I owe so much taxes. I say, oh, honey, you're complaining to the wrong person. What do you mean? I said, you and me both know what owing so much taxes means. What does it mean?
Making money.
It means you made so much more money than you thought you would that your estimated doesn't cover it. And so I don't feel bad for you. I congratulate you. And if you're doing a percentage base into a separate account, you see that money accumulating, and then you just cut the check out of that account, right? So I had to tease that person a little bit and say, hey, you're talking to the wrong person. Remember, we go over your reports. I know how well you did, and congratulations, and sorry you still have to pay tax on it. Last checklist, prepare for your future, including insurance, savings, and investments. This investments thing, I think, is a huge thing for realtors, especially because I see so very many realtors and really entrepreneurs and small business owners in general that do not create and contribute to traditional retirement accounts. And that's not to say that an IRA is the only way to save for your retirement, but have some way to save for the day after your last sign comes out of a yard. That's where I think, in the past, I've recommended that you set aside 25% into your tax account. I really, really like that this class teaches us to set aside 40%, partially because that means that you should always have enough in that account to pay your taxes. Also, if you're calculating everything correctly when your CPA does your taxes at the end of the year, you could take any overage that's in that account and contribute it into an IRA and count that for the previous year. So don't forget to do some of those, to replace some of those traditional job type benefits with your own accounts. That, and have life insurance. Have life insurance. It's cheap. Okay, I'm off my soapbox now. Do you guys have any questions on this page?
No, I'm good.
I'm good, thanks.
You're like, lady, get off your soapbox. All right. All right. Let me show you. We're past an hour, but not nearly at our 2 hours. I'd like to show you where you can get some of the tools that we are referencing here. Let's go here.
I was gonna say, I actually was able to find them on my other laptop and download them. Yeah, I'm printing them now, actually.
Oh, good. Let's see. This will only take a second. Do you guys see my Connect screen?
Yep.
Okay. So in the search bar, which if you don't see a search bar, just grab this little guy right here, the magnifying glass, and type Ignite 2.0 and search. And we'll see it, and they're still calling it a lab. It's not a lab, we're teaching it and it's going great. And we're gonna click on course materials. And then materials right here. I know I went really fast. Let me know if you need me to post a link. And everything in the world for anything having to do with Ignite is here. So the toolkit is here. The participant guide for this session is also here, right? And we're in Elementals Financial Basics Participant Guide. You can also download any other portion of that here. And then all of the tools are here as well. Then the other recommendation is to use the MREA chart of accounts. So if I type that in the search box and then hit documents. Oh, watch, it's not going to work this time. Let's try that. Nope. Got it a couple different places already saved. Sorry, guys. This is what happens when I go live. Oh, it's a giant zip file. If you download this giant zip file, be careful. What I can also do is, if you would like the MREA chart of accounts, send me an email and I can send that to you. I actually have it in a spreadsheet format rather than a giant zip file. I'll show you here. One last thing. Apologies while I bounce around here real quick. The Business Planning Clinic Student Manual. Let me go jump to. Close your eyes, I don't want to make you dizzy. Getting to page 50. Next time that we offer Business Planning Clinic, highly recommend. It is very valuable and wonderful. Okay. Here is the example of the 30-30-40. Right, best practices, and you can see that the lowest GCI that this really starts at for these recommended calculations is 150,000. That's why we have the other spreadsheet that we use. Okay. And here is a sample, and this is kind of a reduced version of the MREA chart of accounts. I was looking for it in an editable format for you guys, but this gives you an idea of what it looks like. And it breaks everything down. So this is where we see the difference between cost of sales and expenses, right? And we've got all these calculations here and the recommendations of percentages for each based on a specific GCI. I always think it's fun to look over here because I think it's really exciting to think about owning a $2.5 million GCI business. And then I go, woo-wee, salary 350,000, right? And I go through and I look at the total, the prospecting and marketing budget, and I go, okay, those guys are working really, really hard for all that GCI. So this course, like I said, is fairly basic, and because because we're in a Zoom format, we're not going to take time to do the scripts and role plays and call people for an hour and all that good stuff. So we are done very early. Is there anything else that I can show you? Any other questions I can answer for you, or any documents that you need me to send?
No, this was extremely helpful for me just to see numbers wise. I feel like I was kind of ignoring the numbers because they were a little bit of intimidating. So you kind of simplified it for me to not be so intimidated by them.
Oh, good, good. And you're definitely not alone in that. I know, rainmakers that have been in business 20 years that don't know exactly how all the calculations work. They just know they sell a lot of houses, they pay all the bills, and there's plenty left. Right. And so that's why we really like to begin with the end in mind and start getting our eyes on these numbers from the very beginning.
Yep.
This is helpful because it makes me have to know that I need to be more organized, especially when it comes to my finances. I do have accounts, but I just kind of throw it in one account and then, take my time putting it where it needs to go. But I need to be more consistent and organized. So thank you very much.
Oh, you're welcome. All right. Well, thank you guys very much for attending. We were small but mighty, and I appreciate you. Hopefully you got something good out of it.
Yeah, I actually enjoyed the kind of personal one-on-one. It was nice for you to fill in those numbers and like tailor it to us. So that was nice. Thank you.
Thank you.
You're very welcome.
Thank you so much, Tabitha.
Thank you guys. Have a great day.
Bye-bye.
Bye.